Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, TSMC, the world's biggest contract chip maker, gets a big boost from AI demand. Plus, Uber teams up with EV maker Lucid and self-driving tech startup Nuro to launch a Robotaxi fleet. We'll speak with the CEO of Nuro. And what to expect from Netflix earnings today. Will it be a blockbuster or a bust? Let's get to that curious three-way deal that is between Uber, Lucid, and Nuro. Basically how it works is Lucid's going to provide the cars, Nuro the self-driving tech, and Uber's going to pay for everything. We're going to get a lot more detail on that later in the show. But look at shares of Lucid up more than 36%. This is a big move upwards, and we need to find out why. The big story in global technology is TSMC, the world's largest and most important contract chip manufacturer. These are the US listed shares, ADRs up 2.8%. Basically upgraded the growth forecast on the top line to 30%, saying that there is hot AI demand right now. But interestingly, some headwinds from currency, which we can dig into. Luckily, Bloomberg's Ian King is here for more, who leads our coverage of the semiconductor industry. So actually quite a simple story, that in the numbers in the period gone and what they said about what's to come, AI demand is everything.
Yeah, I mean, anytime you're saying 30% up, you're saying we're having a good year, but it's important to point out that the stock didn't do much locally. And why was that? Well, because guess what? Some analysts were expecting even more. So fantastic, obviously a great derivative for here, but maybe not as fantastic as some had expected.
TSMC's business is really interesting because basically 2/3 of it is high performance compute, the chips that go into data centers. Historically, it was smartphones. So even though the proportions have changed, I see both of those divisions growing.
Yeah, both of them did well. As you said, high-performance computing, which is basically NVIDIA's chips, AMD's chips, anything that any of the hyperscalers design themselves. That's 60% of its business. That's growing well, and that's really what the focus is right now. That's what everybody wants to see. Is this story that is defining technology still continuing? And the answer was absolutely yes.
So TSMC is like the crown jewel of Taiwan. It's their most important entity and company. They have a big footprint there. But what was really interesting to hear about was the headwind from currency. As I understand it, they book all their revenue in US dollars, but their operating costs are in Taiwanese dollars. What did they say about that and how it's going to impact them?
Yeah, I mean, this is obviously a complex story because they're in a distributed supply chain. You've got the currency headwinds, you've got concern about what's going to happen to that supply chain. Are they raising their expenses as they build factories here in the US? What's going to happen with tariffs? So all of these kind of economic uncertainties, and currency was one of them, factored into, I think, this kind of conservative, or what was considered conservative forecast, but conservative in their context, which is pretty amazing still.
Okay, Bloomberg's Ian King, who again leads our coverage of the semiconductor industry. Let's get more of a broader markets perspective and go out to Jay Jacobs, BlackRock US Head of Equity ETFs. You and I have talked about infrastructure so much, but I almost consider names like TSMC and ASML as being kind of soft data sets rather than kind of hard data sets. ASML gave us one signal and then TSMC gave us another. As somebody that looks at their exposure to this AI supply chain, what did you make of it?
Well, I think you really have to go up to kind of the higher order of capital expenditures, which is impacting so many different semiconductor stocks. If you look at the top 4 builders of infrastructure this year and combine them with energy and utilities companies, all of that CapEx equals the rest of the S&P 500 combined. So you're just seeing so much investment from semiconductors to energy and power sources across this AI megaforce that it's really providing a ton of ballast to these stocks as we enter into earnings season.
I think we'd agree that AI is having a profound impact on markets. That's probably an understatement at this point. But when you consider the ETFs you're managing, where do you see the enthusiasm, or where do you see movement of investors wanting to be exposed to what's happening?
Well, if we look more broadly at what's happening in the markets this year, themes are really displacing sectors as having the most explanatory power of what's happening around us. Artificial intelligence and baskets of stocks related to that explain a lot of what happened in February. If you look at geopolitical fragmentation and companies in the infrastructure and defense space, that explains a lot of what's been happening since April. So themes themselves have a ton of explanatory power in the markets. To your question, where are we seeing some of the most excitement in artificial intelligence? We continue to be looking at the build out of digital infrastructure. We know that we are still in the build phase of AI. This is where you're seeing hundreds of billions of dollars of capital expenditure to build the best models, to make them smarter, to make them more scalable. That's where we are today, and that's where a lot of our active portfolio managers like Tony Kim, who manages BAI for us, has positioned a lot of his portfolio.
BAI is super interesting. We just showed it on the screen, but the ticker BAI. There's this $2.2 billion of interest. You can quantify it. What are the main factors behind that, do you think, Jay?
Well, I think a lot of investors are looking at artificial intelligence but realize they don't really have great exposure to it. In fact, we looked at over 10,000 portfolios by financial advisors in the United States, and about 95% of whatever AI exposure they have in their portfolio is coming just from the Mag 7. So maybe it's because they own index funds that are just broad market in nature and getting that Mag 7 exposure. Maybe they're looking at tech sector and getting Mag 7 through that. But so little of their exposure is to the broader AI value chain across digital infrastructure, power infrastructure, applications, data owners, that we see a lot of investors are more intentionally allocating to AI, selling down tech sector exposure to allocate to a fund like BAI, or even selling down core exposure in U.S. large caps to get exposure to a fund like BAI.
I find this sub-theme of onshoring into America and basically reindustrialization really interesting. Is there a sort of specific basket of names which you would not necessarily feel are the technology sector? I'm thinking a little bit like real estate and all of those names that are involved in the construction of a data center.
Yeah, there's a few areas to look at. One, we just broadly really like U.S. infrastructure names. We've seen some good flows into IFRA, which is a U.S. infrastructure ETF, because if you want to build semiconductors in the United States, or you want to build, kind of high-end technologies like electric vehicles, you need roads, you need highways, you need airports, you need ports, you need electricity on the grid, you need waterways. It really takes a wide range of infrastructure to set up these very expensive and complicated manufacturing supply chains within the United States. So we see that physical infrastructure and digital infrastructure being a really common denominator here. But if you really want to kind of double click into one area, if you look at semiconductor equipment manufacturers, this is kind of the highest upstream way to play. More semiconductors being built in the United States, the semis equipment manufacturers should do quite well, and that's an area we have exposure to in our manufacturing ETF, MADE.
Let's bring it back to the news of the day, which is TSMC. And one of the themes that came up was currency headwinds. And it was really interesting because in simple terms, TSMC is a Taiwanese company that books revenue in US dollars, but it operates in Taiwanese dollars. I give that to you, Jay, to kind of illustrate that this is a name that if you're an American investor, even though it's Taiwanese, you can still get exposure to, but it's a company that's increasingly looking to the US for its own investments and to build out more of its own capacity here onshore or domestically.
Yeah, that's right. What we've seen is, a lot of volatility in the dollar, and the weakening of the dollar generally has, boosted international stocks. In fact, just if you look at a lot of what our investors are doing today, it's allocating to international ETFs to benefit from the changing position of the dollar. So I think we're going to see this more and more this earnings season. Currency is going to be an important factor as companies try to explain how their earnings have done, and there's just a new element to back out of with dollar weakening.
Jay, we're a few weeks now into the second half of the year. What are you expecting and watching for most closely in the balance of 2025?
Well, we just published our thematic mid-year update on iShares.com, and we're really looking at kind of the evolution of two areas, artificial intelligence and geopolitical fragmentation. In AI, what we're looking for is continued breakthroughs in the intelligence of AI. Right now we would say AI models are kind of college level of intelligence. I think we're on the precipice of master's degree level of intelligence of AI, and that should really boost even more adoption. On the geopolitical fragmentation front, we talked about infrastructure a bit. Defense spending is still very much in focus, but also even if you just look at things like people buying gold, a lot of diversification into monetary alternatives. It should be a pretty big trend we see through the end of the year as well.
Jay Jacobs of BlackRock, great to have you back on the show. Really appreciate it. Now, coming up, Congress edges closer to the landmark crypto legislation. We're going to speak with Kristen Smith, Solana Policy Institute president, about everything that's going on in Crypto Week. Let's also take a quick look at shares of Lucid, now up 40%, almost 41%. A deal with Uber and Nuro over the next 6 years for a fleet of robotaxis on the platform. Also, a 1-to-10 reverse stock split, non-dilutive, reduces the number of shares outstanding, proportionately raises the price. Lots to ask about that, and actually later in the day on Bloomberg TV, I heard that the Lucid CEO is going to swing by. Stay with us. This is Bloomberg Tech. Washington's weighing landmark crypto legislation during what's been dubbed Crypto Week. Digital assets have been surging thanks in part to those regulatory prospects, with Ether ETFs seeing a record-breaking 726 million in daily inflows. I want to get out to Kristen Smith, Solana Policy Institute president, and this is the bit that I'm trying to understand. It is Crypto Week, and there seems to be a lot of excitement, and that excitement alone is driving inflows into various places and trading activity across the world of crypto. Is that a good rationale, Kristen?
Well, Ed, first of all, happy Crypto Week. It's great to see you. Yeah, I think there's a lot of excitement within the crypto industry, within the policymaking industry, but within the broader financial services industry around what's happening in Washington here today. Later this afternoon, the House of Representatives is going to vote on 3 bills: the Genius Act, which regulates stablecoins, the Clarity Act, which is the House's version of market structure legislation, and the third bill on central bank digital currencies. So this is a really historic week, and one of those bills, the Genius Act, is going to go on its way to the White House for the president's signature. This is going to be the first time the U.S. government has put a new federal regulatory framework in place, and so I think this is showing the entire market that this is a technology that's here to stay, and it's got the full backing of the U.S. government.
Something very interesting happened this week. It was Crypto Week, but it was also earnings week for the banks. And I'm looking down at the list. You had the CEOs of JP Morgan, Bank of America, and Citigroup all basically acknowledge the digital dollar, but then note that it's a threat to how banking is currently done. In the context of this legislation that's going through, what do you make of that? Those heavyweights of Wall Street and finance saying, we got to think about this.
Yeah, well, I've also seen a lot of those heavyweights talk about getting into the stablecoin industry themselves. And so I think what we have here is there's going to be an upgrade of our technology. Crypto rails, open public blockchains like Solana, for example, are very good for recording transactions and moving payments around the world in a timely manner. And so I think what we're going to see in the years ahead is a real upgrade to our system, one that will lower costs, but will also bring new opportunities. I think what's really great about this legislation is that it will spur innovation across many different sectors, and that innovation is really where the U.S. economy sees its growth come from. And so this is a real opportunity, I think, for crypto, for traditional finance, and for the businesses and consumers here in the United States.
Kristen, you've been involved in different roles in advocating the industry's position to government and to regulators. What does this moment represent? If those different pieces of legislation get done and dusted, how significant is that for what you've been trying to work on in recent years?
Yeah, well, I've been in the crypto advocacy space for almost 7 years now, and so for me, this week is the highlight of my career. I have a red dress I bought to hopefully wear to the White House bill signing ceremony, and I think it's a really big moment. But really, this is, I think, the true opportunity for the American people. I think for a long time, our financial services system has been, sort of stuck in on old technology, and this is the first step forward. And so I'm, very excited that we've had such strong leadership with Senator Hagerty, Senator Gillibrand, also Congressman Thompson and Chairman Hill in the House, and then President Trump and David Sachs and Bo Hines for really, really digging in and making this a priority. I think it's something that we're going to see pay off for all of the American people in due time.
there was discussion that I had with David Sachs in the last couple of weeks or few weeks about the bipartisan nature or not of the legislation. So if we take the Genius Act and stablecoin, for example, there were things that the Democrats wanted in there that ended up not being. From the Solana Policy Institute's perspective, did you get what you felt was needed in the content of that bill?
Yes, at Solana Policy Institute, we're very happy with the way that the Genius bill ended up. And people who know me, I'm very skeptical of early drafts, but that's why we have advocates in Washington who can work with Congress, fine-tune the legislation, and make sure that it has the customer protections that the policymakers want, but also is done in a way that allows those who are building around the technology to have the certainty that they need in order to build and innovate. And so I think they've nailed it here with the Genius Act. I think it's really good language, and I think it's one of the reasons why the House is going to, sort of pass it without changes and send it on to the president's desk. There is another issue, the market structure issue, that debate is continuing to happen. And so, if there's any cleanup that needs to happen, I think we'll get another bite at the apple.
Kristen Smith, Solana Policy Institute President. Great to have you back on the show. Thank you very much. Now, coming up, Uber teams up with EV maker Lucid and self-driving tech startup Nuro to launch a Robotaxi fleet. We're going to speak to the CEO of Nuro. That's coming up next. This is Bloomberg Tech. Okay, let's take a look at shares of the EV maker Lucid. Take a look at this. The stock in the session is currently up significantly, 46%. It went wild in the pre-market for various reasons. The first one that hit the wire, a reverse 1-to-10 stock split. Basically, it is non-dilutory. It reduces the number of shares outstanding. It proportionately raises the share price for holders of note. Later in the day, we can get into the mechanics of that, because what's really boosting it is the three-way Robotaxi deal that this company's done. Lucid, with Uber, is launching a partnership along with self-driving tech startup Nuro. It's a new Robotaxi which will be available on Uber's ride-hailing service. The details are important. Fortunately, Dave Ferguson, the co-founder and president of Nuro, is with us. Give me a second with this. Lucid provides the Gravity SUVs. You guys provide a part of the technology stack. Uber basically pays for everything. They've invested $300 million into Lucid, several $100 million into you. What happens next?
Yeah, so Ed, first, thanks for having me. Great to see you, great to be here. I think you've got it. So Lucid is integrating Nuro's driver hardware component, so the sense and compute, into their vehicles on the production line. Those vehicles are then shipped to Uber. Uber owns and operates them, and Nuro driver's software provides the driving capability for those vehicles on the Uber network.
What does Uber get out of its investment in you? In fact, let's just be honest about it. Lucid's is clear, $300 million. How much is Uber putting into you, and what are they getting in return in terms of IP or guaranteed access to something?
I think Uber is investing in Nuro in a standard equity stake. And so okay. I think that they're very, very excited about this partnership and this program, and they want to make sure that all of the parties are very vested in the success of that program. And so they want to make sure that they also have some ownership and frankly some upside in Nuro, given how deeply we're going to be partnering to build this and the scale that we're going to be embarking on together.
How much are they investing?
Well, we carefully worded it as several hundred millions. Yeah.
Why not just give us a number?
Yeah. Well, I think some of that is within our control and some of that is outside of our control. Right. I think we would not mind so much giving you the number. I think there's more sensitivity in other calls.
Well, we'll phone Dara and Uber and ask. You have a very close relationship with NVIDIA, essentially building on top of what NVIDIA offers end-to-end. Just explain it, because it seems like a bit of an unlock for you guys. And this deal kind of involves NVIDIA to a certain extent as well.
Yeah, absolutely. So part of what we believe differentiates Nuro is that we have a dramatically lower cost hardware set of sensors and compute that powers all of the vehicles that we create as self-driving vehicles. And so NVIDIA plays a very large part of that because they provide for us the SoC that powers all of the compute. So all of the compute on this Robotaxi platform is going to be based on
That's
NVIDIA's...
the Thor chipset.
The Thor SoC, that's right. And for us, for Nuro, that has dramatically simplified our overall compute because before we had that system, we had to have FPGAs that dealt with the raw sensor data, we had to have CPUs, we had to have GPUs, we had to have safety computers. We've been able to effectively collapse all of that into the Thor SoC. So it's a simplification in the complexity as well as a significant reduction in cost.
You've been, I understand, testing a Lucid vehicle, but on a closed circuit to make sure the tech stack works. What's the evolution of that? Like the plan, as I understand it, is Gravity goes into production late 2026. And 20,000 of them are due to Uber over a 6-year period. How do you get to public roads?
Yeah, so we, as a company, Neuro's been doing fully driverless operation on public roads for over 5 years now. So we have a lot of experience with what it takes to validate our tech and to get it out onto those roads safely. With the Lucid platform, it's obviously a new vehicle platform for us to work with. We got the first one going, our first prototype in something like 7 weeks, which is unheard of for us and we think the industry. So we've been moving very, very quickly.
So Lucid's providing the sensor suite?
The sensor suite is Nuro driver hardware. So it's a sensor suite that Nuro has designed, although all of it is automotive grade sensing, off-the-shelf sensing. So Nuro has basically provided a design template for that, and Lucid is going to integrate that. For the prototype vehicles, we're doing small-scale integration. For the 20,000 fleet, it's going to be integrated directly into the production line.
You were focused on delivery, not moving humans. Have you just done with that now?
So about 2 years ago, we shifted our go-to-market. We used to be building a fully vertically integrated delivery as a service business with our own custom vehicles. Two things changed about 2 years ago. The first is that the cost of capital dramatically increased. And while we still today like that business model, it requires a huge amount of capital. So it no longer made sense for us to take on all of that. The second thing that changed was the tech that we had built was so heavily based on AI that we had learned how to drive like an expert human driver. So we could expand it beyond goods to also passenger transportation. So we made the call about 2 years ago to stop doing goods and to license the tech across a range of applications.
Dave, just very quick, 10 seconds. Do you really believe that Lucid can manufacture all these to the deadline you've outlined?
Oh, absolutely. Yes.
All right, Dave Ferguson, Nuro co-founder and president, thank you very much for being here with us in San Francisco. In about an hour, a conversation with Lucid's interim CEO, Mark Winterhoff. That's at 12:30 p.m. New York time, 9:30 a.m. here in the Bay Area. Okay, coming up, details of an agreement between Facebook and US privacy regulators emerged in the Delaware court yesterday. We're going to have an update on a recently announced settlement between Meta shareholders and the company's board of directors. So that's next. This is Bloomberg Tech. Welcome back to Bloomberg Tech. In the context of earnings, I think Netflix is kind of what we're all waiting for after the bell. We're not going to get a subscriber growth number anymore. So what are you going to look at? Most are saying the content slate. What is Netflix going to bring to us in the second half of this year? Shout out to those of you that are going through Squid Game at the moment. The stock's up 0.8%, but we're basically treading water. And then there's the outlook. Netflix has said for a really long time, Wall Street treat us as you would any other company on our top and bottom line. And so we'll look at margins, we'll look at operating income, but what might they do in pricing, raising prices in various markets to give them a bit of a boost? Really looking forward to that one. Elsewhere, away from the domain of markets, we're focused on some litigation. Investors in Meta say they've reached a settlement with current and former directors at the company to end a multi-billion-dollar case that just started yesterday in Delaware. I want to bring in Bloomberg's Riley Griffin, who you'll remember 24 hours ago was here with us on the show. What's happened in the interim, and what is this agreement that we've learned about?
It's amazing. So yesterday you and I were discussing how it's very rare for these kinds of cases that seek to hold board directors, CEOs, executives personally, financially accountable for the crises at their company. Now we have reached a settlement just one day into the 8-day case. We do not yet know the financial terms of this deal, but this means that out of court, we now know that Mark Zuckerberg and other board directors aren't going to be testifying later this week. There isn't going to be more evidence presented, and some sum is being paid out to shareholders for this case, which was about the data breach, Cambridge Analytica, that has had that long shadow over years and years for Meta.
So as we made absolutely clear just now, but also yesterday, this wasn't a case between the company and the shareholders. It was specific executives and the board of directors. Does that mean that's it now, that it's done?
As far as I understand it, it is done. We are not going to see Mark Zuckerberg testify. We are not going to see Peter Thiel testify. I think that is a notable part of this story. We were going to hear from the board members themselves. Just yesterday, actually, we heard from Jeff Zients. This was a former Facebook board member who also went on to be President Joe Biden's chief of staff. And what came out of that testimony was interesting. We heard from Zients that ultimately the board had considered negotiating with the FTC, proposing through its lawyers that it would reach a multi-billion-dollar settlement over Cambridge Analytica, but only if Mark Zuckerberg wasn't held personally responsible. So that is one glimpse into the kind of evidence that can come out in a trial like this. And one day in, they've shut it down. We are not going to hear from other board members or the CEO.
Bloomberg's Riley Griffin on the Meta beat. Great reporting. Thank you very much. Let's get to some deals news. Princeton Digital Group is getting $1.3 billion from alternative investment firm Stonepeak. The funds will be used to accelerate PDG's data center operations, which are across Asia. The business already has over 1.1 gigawatts across 6 countries in the region. Delighted to say we're joined by PDG's chairman, CEO, and co-founder, Rangu Salgam, who's joining us late at night out in Singapore. Welcome to the program. Let's just start with the basic mechanics. There is an interesting equity investment going on here. Why did you go down this route with the investor rather than just kind of a straight equity kind of deal?
Good morning, Ed. Thanks for having me. It's a pleasure to be on your show. PDG has grown at a phenomenal rate over the last 6 years, as you mentioned, and we have 3 of the world's largest investors, Warburg Pincus, Ontario Teachers Pension Plan, and Mubadala. And we are at a juncture where we thought it's a great time to have an alternative investor, an infrastructure investor like Stonepeak come in. That gives us tremendous level of optionality, how we can grow from here. For example, Warburg still is interested to grow with the company. They see a tremendous growth ahead, and they having been in the business for 7 years, they are keen to continue for some more time. So that, with that in mind, an opportunity to grow, also consolidate our position in the market by mergers and acquisitions and other means, gives us an opportunity to really scale up and be a market leader in this part of the world. And Stonepeak really brought a tremendous solution that fitted for what we are looking for, Ed. And that positions us well to capture the AI growth that just started off in Asia.
We've got to talk about that AI growth, but really quickly, were there other investors knocking down your door other than Stonepeak?
Yes, I think we had a lot of interest in the market of different folks, large private equity firms, as well as sovereign funds and so on, and as well as insiders who were very keen. And Stonepeak turned out to be the best solution for what we were looking for.
So the big question is what happens next, right, Rangu? You operate in 6 nations across Asia. What's the next market? And when you think about the next market you enter, how much is it part of the equation how quickly you can build and start operations at any one facility?
Yeah, that's a very important aspect of what the market is looking for. If you look at what our customers look for, our customers are large hyperscalers. These are some of the largest tech companies from the West Coast, as you know. There are 2 things that matter for these customers when they are expanding in a market like Asia. They want to look for partners who have an execution track record, a track record that is impeccable in the market. Second, they look for operators who have deep capital partners. And PDG brings both to these markets. With that in mind, our strategy is now to expand in new markets, get into new markets like Australia and South Korea. That's on a plan. And second, deepen in the markets that we're already in, like Japan, like India. which are huge markets in the making. And our strategy is to go in and deepen in those markets as well as enter new markets. That gives us to be a great partner, a trusted partner for the US hyperscalers who are expanding in these markets at a rate like we have never seen before.
Rangu, I think back to Meta's last earnings call and the explanation that one of the reasons they raised the capital expenditures, get guidance and range, wasn't just the commitment, but it was the higher cost of doing business, the higher cost in the supply chain for data center. Do you see higher costs in your supply chain right now?
Not yet, Ed. We haven't seen the implications of any market dynamics that are impacting our supply chain. We have a pretty much good lock-in for the next couple of years on a complete supply chain. And also the good news is for us, a large part of our supplier manufacturing happens in Asia, and that gives us an edge in terms of the cost being lower, being part this side of the world. So overall, we are not seeing cost pressures yet. At the same time, we are seeing a tremendous level of supply opportunities when it comes to power, for example. There are parts of Asia where there's significant excess power and good quality power. That gives us an opportunity to build these large-scale AI data centers, which are closer to this good supply of power at very reasonable cost. And that really positions operators like PDG in Asia very well in the eyes of the large US hyperscalers.
Rangu, I know you just raised a significant chunk of change, but I got to ask about IPO and when you're thinking about a listing.
I think we are well positioned to do a couple of things, either do an IPO in the near term. There's a trade sale opportunity. But the bigger exciting thing, Ed, is to really consolidate our position in the market. We believe the market tells us we are one of the 2 or 3 top players in Asia-Pac. And I think we grow at this pace. We have an opportunity to really consolidate the market by making acquisitions and be a much bigger scale in the next 3 to 4 years. And that gives an opportunity for us to go public.
Rangu Sargame, Chairman, CEO and co-founder of Princeton Digital Group in the data center space. Great to have you on the show. Now coming up, Roblox CEO David Baszucki joins us to talk about the company's new age verification tech. Will it work? How will it work? All the questions to come. This is Bloomberg Tech. Gaming platform Roblox is introducing a new feature for verifying users' ages. Take a selfie, and the AI will estimate the user's age. If the tech determines they're over 13, then the user will have access to the new Trusted Connections feature, where they can chat freely with other Roblox users. Delighted to say that joining us now is Roblox's CEO, David Baszucki. Dave, good morning. Thank you for being back on Bloomberg Tech. I find the tech so interesting here. Could we just go over the basics of how it works and why this is the right technology for this issue?
Yeah, thank you. We've been innovating on safety and civility for almost 20 years. And what we're rolling out today is our vision for age-based communication. Age-based communication, especially for teens 13 through 17, which is a vulnerable time, involves a couple things. First, trusted connections, so identifying friends and people that you know and trust. And second, using age estimation to enable trusted connections to actually allow those teens to speak a little more freely on our platform, even though we do scan the text for critical harms. And this is super important because business notwithstanding, engagement notwithstanding, we're trying to keep people on our platform so they don't jump to other platforms where they may share images or where they may communicate without text monitoring.
Dave, the skeptic here will say, well, how good is the AI? How can the video and an AI analysis of it guarantee a correct result that the person using it is indeed age 13 or older?
I want to highlight a couple things. We've been innovating on AI for 4 years plus, and we're running over 200 AI systems. We've open sourced our voice moderation system because it's so good, and we've really advanced the state of the art in text moderation systems as well. This is age estimation. The AI is really good. It's not perfect, of course, but we're leaning conservative in that case. And I'll highlight, we're using this in a conservative way to enable freer communication that is still monitored. So we've really thought a lot about it, and we think this is the future of how teens will communicate.
In testing, what has the proportion been of sort of false positives and accurate results? And is there an element of sort of human moderation in the first instance?
Yeah, well, I want to highlight, historically, there's always been an element of moderation on Roblox, and all text, all voice, all images has always gone through moderation, including AI and human moderation. So we have such a firm foundation for safety. We're using age estimation to, in a way, slightly free up the communication. If you and I were 14 on Roblox and you called me a butthead, I wouldn't see it. We'd see a bunch of hashtags. But it's the kind of thing a lot of teens like to chat about. And when it's with people you know and trust, we're open to letting them communicate more freely in that way.
Dave, it's probably really helpful to put this in the context of a case study or an example, and grow a garden is probably the best, right? So if you just bear with me and then we bring it back to product safety, there are all of these teenagers wanting to be on Grow a Garden and then share with their peers, right? Their friends, their community of a similar age. How does this new technology fit into the daily running of that game and how players and users interact with one another?
Yeah, thanks for highlighting Grow a Garden. Just as last summer Dress to Impress was, going crazy on Roblox, right now Grow a Garden has hit over 20 million people playing it at the same time, which is actually a record, we believe, for any game in the history of gaming. People really want to hang out with their friends and communicate. And up until now, if you and I were 15 and we were trying to communicate, once again, we might see some hashes and some blocking when we're trying to compete in the game. With the release of this, if we are trusted connections and we can validate we're people we know and we trust, and then we take a selfie to estimate our age, we're going to be able to communicate more freely and have possibly more fun in Grow a Garden, and be less likely to go to some other platform where maybe we start sharing selfies or things that we don't allow on Roblox.
Right. Dave, is Grow a Garden the biggest game you've had ever?
Well, I think it's been very public. A couple weekends ago, we hit over 30 million people on Roblox playing at the same time. And for a moment in time, Grow a Garden hit over 20 million people playing at the same time. It's not just the biggest we've ever had on Roblox. That is, we believe, the largest concurrent player of any game in history.
And just very quickly, Dave, would you just define largest concurrent played?
We believe from the Guinness Book of World Records that 20 million is the largest concurrent players of any game in real time in history.
Okay, understood. What many people don't appreciate about Roblox is the scale of your own infrastructure, I think, that you run yourself. You have a lot of footprint on-prem. With all the activity, are your servers and CPUs just melting on Friday and Saturday nights, or how are you handling all of the traffic right now?
We do like it when our servers melt, as long as we stay live and we stay up. And what we have done over the last couple of years is abstracted all of this infrastructure we have. And you're absolutely correct. We believe we get better performance, better reliability, and better cost building out all of our own data centers around the world. We have started working with partners, though, and those partners, Azure, Amazon, AWS, GCP, at peak times to burst into their cloud as well. And so we can run all of our own infra, but for Saturday morning for 2 hours, we're actually relying on some of these partners to hit those peaks.
Dave, Roblox has been subject to a lot of scrutiny over child safety. The feature that you're announcing today, but also the sort of technological capability, for you as the leader of this company, where does it rank in what you think will sort of address those historic issues, but also just allow you to move forward in growing? Because you have an ambition, right, to capture 10% of the market. And I'm just trying to understand how this piece of tech allows you to tap into a demographic that will get you there.
We've been focusing on safety, civility as top priority for almost 20 years. We believe this is the future of communication on social platforms, especially for teens. And we believe the future will be, for teens in that vulnerable time, trusted connections plus some form of age estimation or verification, or maybe someday help from the phone vendors and other things. But ultimately for private chat, we believe this is the future. So we haven't been waiting for the law. We haven't been waiting for legislation. We think this 13 through 17 segment is just as important as 13 and under and 18 and up.
We didn't even get to advertising on the platform or all of the millionaires that are being minted through the platform. Dave Baszucki, you have to come back, CEO of Roblox. Thank you very much. Now, coming up, Netflix readies to release its results. What to expect from the streaming giant? That's coming up next. This is Bloomberg Tech. Netflix drops earnings after the bell, and no, subscriber numbers won't be in the script anymore. The hot scenes to watch out for? Netflix's operating margin forecast, currently 29%. Will advertisers keep tuning in as the ad tier ramps up? And can management tease out new growth from live sports and big name content deals? And with that key stat, subscriber growth, left on the cutting room floor, engagement could steal the spotlight, especially with a killer second half lineup. Squid Game, Stranger Things, Wednesday, Knives Out, Taylor v. Serrano 3, and even NFL. And keep track of price hikes. Will they be padding the bottom line all year long? Stay tuned, because we've got more with Bloomberg's Ryan Vlastelica, because this earnings episode might just be binge-worthy. Puns aside, Ryan, what's Wall Street saying?
Hey, Ed, thanks for having me on. So everyone is pretty optimistic about Netflix's position right now. They continue to benefit from a lot of very strong secular trends, not just the shift towards streaming, but also their ability to continue growing ad revenue on their platform, their continued embrace of live events like sports as a way to further juice the sort of ad part of the business. The only question is all this expected? Is all this priced into the stock? And are expectations too high given the stock has been one of the real standout performers of the year?
Right. Year to date, the stock up 41% so far in 2025. Netflix has been saying for quite a long time, we want you to judge us by normal financial metrics that all other industries and companies are judged by. I said we won't get that subscriber count or subscriber growth. So from a top or bottom line perspective, what is it that we look to with Netflix?
I think anything they say about their outlook from here, what they're going to be spending on content, their continued ability to sort of improve efficiency and kind of improve their cash flow, their earnings, all that is going to be taking the place of subscriber numbers, especially since, at least here in the States, pretty well saturated. They're pretty well positioned across the globe. So I think that might be of less interest to people right now, but certainly you mentioned all the content they have coming out. People are very interested to see, are some of the gains that we've been seeing already this year, is that likely to continue, or are they due for some kind of consolidation here? On a separate note, I'd also be very interested on anything they say about competition from sort of newer entrants, things like YouTube and TikTok, or those areas where, Netflix maybe faces some competition as like new places that people are going to view content.
I pay for the non-ad tier. I've just completed Squid Game Season 3. I'm watching The Sandman. That's a bit of a miss with me. But if I were to pay for a tier where ads were involved, what are we learning about advertising and Netflix's platform? Because this is an industry-wide thing right now.
Yeah, we are seeing more companies start to explore these kinds of options. Obviously, Netflix has a huge subscriber base here in the States. Hundreds of millions of people use it. I think they even started automatically putting some people on the ad tier, because if people are watching it enough, you're actually making more money with the ad revenue from those viewers than you would be getting if they were paying up for the higher tier that doesn't include advertising.
Bloomberg's Ryan Plastellica with the Netflix preview. Thank you very much. So that does it for this edition of Bloomberg Tech. Stick with us at 12:30 p.m. New York time, 9:30 here in San Francisco. We have an exclusive interview with the Lucid interim CEO, Mark Winterhoff, with that stock up more than 40%. Don't forget, check out the podcast. You know where to find it on the Bloomberg terminal and Bloomberg platforms, as well as online on Spotify, iHeart, and on Apple. From San Francisco, this is Bloomberg Tech.